A major teen retailer gets punished by investors. Investor Beat starts now. Thanks for watching. I'm Erin Kennedy. The Dow is in recovery mode today, climbing up more than 50 points after 6 straight days of losses. Weekly jobless claims came in higher than expected, but they're still near 5-year lows. The Nasdaq is having a very bumpy day, halting trading a little past noon after some technical issues arose. Joining me in the studio are Jason Moser and David Hansen. Gentlemen, our top story. Teen retailer Abercrombie Fitch is getting pummeled by the market today. A&F reported earnings this morning, and the stock has dropped as much as 19%. Jason, retail's been struggling somewhat lately. Do you think investors should be this surprised?
Well, probably not. I mean, we saw a number of companies kind of get out in front of this bus and sort of pre-announce, getting us ready for their bad quarter. And unfortunately, Abercrombie Fitch did not do that, and so they're kind of suffering today because of that. But when you look at how the company performed, I mean, I think it was the same-store sales were down 11% in the U.S. I think 7% internationally. I mean, this was just a really, really bad quarter. And I mean, I don't know if it's any backlash from Mr. Jeffries, the CEO, who made those comments about larger people and uncool people not being welcome in his store. But hey, it probably suits him. So I mean, bad quarter aside, I'm sure they'll probably pick it back up at some point. But it has been a very tough retail season.
Do you think it was a problem that management didn't telegraph expectations well enough?
Probably. I mean, I don't mind it when they pre-announce, because when they do, you kind of get out in front of it early, the stock takes a hit, and then by the time earnings come out, the stock is more or less recovered, and it's no real surprise. But, I mean, we're still seeing some decent performance from companies like Urban Outfitters, for example. Now, that's one of the few, and Gap will be coming out with earnings later. I'll be interested to see how they perform as well, but certainly Abercrombie & Fitch, nothing to smile about.
David, given that this is kind of a rough sector right now, especially given Walmart, Kohl's, Macy's, they all gave weak forward guidance. Is this a sector you like?
It's a cyclical sector. It's going to go through ups and downs, especially when we look at Abercrombie & Fitch. That's a very teen-focused. I'd be much more interested in a company like Macy's, even though they've had a little bit of a rough run here, or a company like Nordstrom. I'd base my investments maybe a little bit more towards those than these teen retailers that go up and down so often.
All right, let's get to some of today's movers and shakers. Hain Celestial is up 12% after reporting fourth quarter numbers. The company beat expectations and the top line jumped 32%. Jason, Hain is clearly crushing it, but they've got a 30-plus PE. Do you think the stock's fairly valued?
Well, fairly valued, that's a tough one maybe to argue, but I think it's valued for some optimistic assumptions. I mean, you remember that movie Back to School with Rodney Dangerfield, where he did that dive, the triple Lindy? So Hain's pulled the quadruple Lindy this quarter, where they beat earnings expectations, beat revenue, they raised earnings, and they raised revenue. So the quadruple Lindy, they killed it. But they are recognizing that in the U.S. alone, that they're seeing demand for the natural and organic sector outpacing the conventional sector by a factor of 5. So there is something there, and it's not just Whole Foods anymore. You have your stores like Kroger and Publix and all these other stores that are trying to get in that game as well. Hain benefits from that. So I think the future looks very bright indeed.
Next up, we've got GameStop. GameStop's up more than 10% today after reporting second quarter earnings. They beat expectations, but David, GameStop reported lower profit and sales figures year over year.
Well,
is this jump justified?
A little bit. They did raise guidance for the full year in anticipation for the new Xbox coming out, the new PlayStation coming out. And when you look at this stock up over 10% at some points during today, some of it is because of those expectations. It's also because there were a lot of people out there that were shorting this stock. So when you have results like this, you can get a little bit of a short squeeze, and you can see those 10% jumps. It's not necessarily a stock that I'm crazy about, but it's proven some people wrong and continues to do well.
In a similar sector, tech stalwart Hewlett-Packard reported earnings last night, and shares are taking a beating, over 10% down. Jason, HP has been one of the Dow's leading components year to date. It was up 78%. Were investors just expecting too much out of HP?
I don't know. I mean, I think this is just the turnaround that's still in the process of turning around. And management made it very, very clear that they don't see 2014 as really a year where sales are going to grow. And so when you hear that, I mean, the stock is going to get punished regardless. Some things I noticed in the call that are also concerning, I think, is when they refer to trouble in Europe still and a soft market in China. For a company that makes 65% of their money outside of the U.S., I mean, that's a problem. And so this is going to be a long story as far as the turnaround goes, and I don't know that I would have the patience to wait it out.
Well, our last retailer is Sears. Sears is down more than 8% after reporting second quarter earnings. David, Sears missed estimates, consensus for EPS and revenue. Did you see any good news in this earnings report?
It was slim pickings a little bit. Same-store sales down for the quarter, and that's been not just a quarter trend. This has been an annual trend, couple years now in a row of just declining sales, declining revenue. Gross margins down over 2%, so not a lot to like there. They did show some positives in their new loyalty program, their new membership program. Not enough to offset some of those big declines there. When you look at Sears as a stock, for so many years it's been pointed to as, oh, they have those big real estate assets. This can be a breakup play and long-term value. I don't know if it's one for foolish investors to put in your portfolio and hold for the next 5-10 years. I don't know if Sears is going to be around that long. So there could be value at the right price, but I'm not rushing out and buying it today.
I hear you there. That's it for Thursday's Movers and Shakers. Guys, before we go, tell us about one stock you've got on our radar. Jason?
Right. So one probably a lot of people have not really heard about yet. It's fresh new IPO, and so the name of the company is Control4. You know, if you listen to the Consumer Electronics Association, apparently in the U.S. now there are an average of 24 electronic devices per household. That seems probably pretty reasonable, but the thing is now we're trying to figure out how to connect all these devices and sort of connect our house to these devices as well, and that's what Control4 does. They focus on the smart home, and so it's a really interesting nascent market, really starting to sort of find their way around there, but it is a significant market opportunity out there. Control4 is, you know, they're one that they work across platforms and they make it relatively affordable as well. So I think it would be attractive not only for housing but also for restaurants and other businesses. Their earnings come out on August 29th, and so I'm going to be keeping an eye out, looking forward to the call to learn a little bit more about the business and how they see the future.
David, what are you keeping an eye on?
One that's newly on my radar, it's called American Towers. This is a company that owns wireless communication towers, and then they lease space on those towers out to the big communications and telecom companies. They've expanded pretty widely internationally, and they've recently classified themselves as a REIT, so they pass most of their earnings, 90% of their earnings, onto their shareholders. So this is a company that pretty wide moat business. Not a lot of people are out there buying telecommunications towers, so wide moat business there that's moving internationally. That's why it's on my radar.
For Jason Moser and David Hanson, I'm Erin Kennedy. Thanks for watching, and we'll see you tomorrow.